welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Donny Gilbert giving us an update for the brokers. We also have Mike Baudendistel back with us with a rail and intermodal update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Tuesday carrier update presented by PowerFleet. I'm Zach Strickland, and I wanted to break down the region's tender rejection rates across the United States today, just to give everybody a sneak peek, because the market is relatively flat right now, but that doesn't mean that everywhere is flat, although it does look that everywhere is relatively flat right now, except for, and you look right here in the middle, the southeastern market down here, the southeastern region just had a little uptick in tender rejection rates, still a moderate 4.76%, nothing to get too excited about, especially on the spot market side. The Midwest region up here leading the way at 7.59%, one of the largest, it is the largest region in the United States, the way that we have it broken out. Down here at the bottom, the West region, which involves Southern California, that area has greatly stabilized over the last several weeks or so. Not a lot of activity on the spot market out there. So let's go ahead and take a deeper dive into what's going on in the rest of the country here. So you've got obviously a big weather system stretching across the eastern half of the country, a lot of rain and storms in the southeast, and that's the market that I want to focus on this afternoon, or this morning today, to just break this down, because we have a few mixed signals here in the southeast. We have a blue market on our weighted rejection index map, which is the Savannah market, which means that we are seeing increasing rejection rates relative to volume in that area. One of the biggest markets in the country is Savannah because of that port activity down there. But we also have a dark red market down here in the southeast United States, and the New Orleans market. But this region expands into, Alabama and northern Louisiana and little parts of Texas over here. So that means that the markets are stabilizing in this part of the country right here down in the southeast. So breaking this out, the Savannah, Georgia market. So we see not all is exactly what it seems when looking at this map, because we have a huge spike in tender rejection rates going all the way up to 5.08% rejection, where it was sitting down right around 2.25% for van rejection rates. Reefer rejections not doing a lot, so don't expect a lot of activity here. So what does this mean for carriers operating in the Savannah market? Looking at all the lengths of haul here, most of them are seeing increasing rejection rates, but one that sticks out pretty clearly here is the local outbound tender rejection rate, which is shot all the way up to 40%. Local rejection rate means that anything around 0 to 99 miles of movement is going to be experiencing a lot more spot market activity, and intense amounts of volume potentially. But if you are operating down here, don't expect a huge amount of spot activity, but maybe anything moving around just that area of Savannah, expect a little bit more activity, mostly minimum freight, so don't expect a lot of long haul freight movements coming out of here. So what does that mean for New Orleans? New Orleans going the opposite direction. New Orleans having declining rejection rates throughout all lengths of haul, except for the long haul rejection rate, which long haul and tweener freight, anything moving over about 450 miles, is going to be over 50% of this market's overall total volume. Declining rejection rates going throughout there, except for this long haul, which is about 6.33%, which is above the national average right now. Still decent to operate out of on the spot market-ish, but it is in a declining state of being. So we see the tender rejection rates for both reefer, dry van, and then we have Mobile, Birmingham, also seeing a trending downward in terms of rejection rates. So this area of the country, you should not see as much activity this week versus last week. So New Orleans, here's all the volumes. The good news is that contracted freight volumes are trending higher, except for the Mobile market. The Mobile market is starting to decline a little bit on volumes. Birmingham, New Orleans, trending higher on contracted volumes. So you should still continue to see some decent freight volume out of this area, except for on the spot market. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Thank you, Zach. My name is Donny Gilbert, and I'm going to bring you the brokerage update for Tuesday here. I'm going to first start out by looking at our outbound tender rejection rates on a national level. We're going to look at both our dry van and our reefer. Here on this chart here in blue, I have our dry van tender rejection rates. And as you can see, over the past few days, they have started to climb up. Now, I'm kind of zoomed in pretty close on the map, so here this looks like a very large climb. It's actually from just below about 5% up to about 5.24%. So not a huge climb, but I'd rather see it climbing up than, of course, either being level or actually falling down where we saw back earlier in the month. In the red line here, I have our reefer tender rejection rates, and this is one that I'm more concerned about. Here over the last, probably about the last week, we've seen a lot of the rejection rates just continuing to fall, down, 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 and right now it is trending down right now. So this is kind of an issue for reefer right now. It's still elevated around the 12% mark, but rates for reefer overall are starting to decline across the U.S. Now, I brought a different type of map here I want to show you. This is, of course, our U.S. map, but this again is outbound tender rejection rates. This one is dry van, but this is the change over a 2-week period. So what markets have we seen increasing? What markets have we seen decreasing? Of course, starting here up in the Northeast, you see a lot of red. This red means that the tender rejection rates in this area have decreased. And over the last 14 days, basically it's actually since the beginning of October. So here are a few markets across Pennsylvania and New Jersey we see picking up. And down along the coast here, South Carolina, North Carolina, and Georgia, we see markets down here that have actually been increasing overall in tender rejection rates, working up through South Carolina and Kentucky, Missouri, around in these areas. Atlanta still staying neutral. Markets in Alabama are continuing to fall as well. We see a lot of what is picking up through the Midwest here. And of course, Zach touched base on that, where the tender rejection rates, when he was throwing them out by the region, that the Midwest was one of the highest tender rejection rates of the country overall. So here we see it, some of the areas out in the western areas of the Midwest, the Plains area, these are all kind of getting some blue going in here. And of course, Denver, Colorado, and Salt Lake City a little bit as well. West Coast, a lot of red on the West Coast. So this is where we see our markets that are heating up and some of the markets that are cooling down right now over the past 2 weeks. Change this over to reefer, and a little bit different of a map here. You see a lot of white on the West Coast, the Idaho, Oregon and Utah markets that we've seen hot in the past, these are starting to die down. We got Seattle and Portland starting to heat up a little bit for reefer tender rejection rates. A little blue here in Iowa, Nebraska, Missouri, and of course we see Florida down here is actually starting to turn a little bit blue as well. So we're getting it's still a little bit soon for produce season, but Florida's going to be a market to start watching here over the next few weeks. The Ohio Valley and some of your markets in the Northeast are starting to pick up with tender rejection rates for reefer. So here, a lot of the markets have remained neutral. We have some that are moving down and a few that are actually picking up. Now, my market of today, we're going to look at Minneapolis. Minneapolis, we see here in blue, I've got our outbound tender volumes, and in the green here, I've got our inbound tender volumes. So looking at our outbound tender volumes for Minneapolis over the past week, we see where they picked up a lot. But as well, we also see where our inbounds have picked up as well. So not a really big effect on capacity at the Minneapolis market. A little bit tighter. Let's go ahead and check in kind of on our tender rejection rates, and that's going to be the real telltale sign of what's going on in this market. So we look here on your left-hand side here, we've got reefer tender rejection rates in blue, and we got dry van tender rejection rates in green. Reefer tender rejection rates have kind of flattened out over the past few days, but they're still at 30%. Dry van tender rejection rates are picking up. They've jumped way up from 9% to 16%, so we got a lot of upward movement in our rates here. But looking at our outbound tender lead times, we see both dry van and reefer are starting to turn down from this weekend. So we have upward pressure right now for rates, but shippers are starting to relax on tender lead times, so keep an eye on this market. Bid on it right now, bid high because rates are on their way up, but tender lead time tells us that the market might start to dip back down. And that's your market update for today. Thank you.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
I'm here for your rail and intermodal update. I'm here with Mike Baudendistel. Mike, last week we were talking about Canadian protest.
Yeah.
What's the latest situation?
The latest is they're still ongoing, and if anything, they've gotten to be worse and more disruptive. In some places, they've actually popped up in certain other locations, and they've spread a little bit more to eastern Canada. Maybe last week we talked a little bit more about the impact on the west, but on these two charts, we have outbound loaded rail container volume. This in Western Canada, Prince George, so you have to go through Prince George from Prince Rupert. That's the fastest growing port in North America. You see how much this has come down. So it's basically gone from 1,300 containers a day to 400. They basically shut down operations in many cases. In some cases, it's hard to get the containers from the port to the rail, even though it's right there at the port location. And the right here, this is Halifax, Nova Scotia. So in the far eastern part of the continent, that's a smaller market, but you see even there going from 300 containers a day down to less than 100. So it has been widespread. This chart shows there's a lot of red on the screen. This is outbound international rail container volume. Canada is primarily an international intermodal rather than domestic intermodal, so it goes in mostly 40-foot containers moved on behalf of the container ship lines. And you see it's down across the board. If there's a nugget of good news is that the largest market is Vancouver, and that's down less than some of these other markets. And the way that I would explain that is there's actually been some arrests in Western Canada in British Columbia, but in the east they've been really reluctant to do that. I don't think there have been any yet, and you see in some of these locations like Toronto down 56%, Montreal is another one there down 70%. Canadian National just had their some stats from week 7 that they posted on their website, and they were showing terminal dwell. I mean, that's not intermodal, that's other types of freight, but terminal dwell at Mac Yard in Toronto up over 10 hours from the previous week, and then the yard in Quebec near Montreal, that was up over 11 to 12 hours.
Gotcha. And so, Mike, one of the things that you mentioned is that it's going to have some international effects, right?
Mm-hmm.
So there's a lot going on in Canada. Is there going to be any impacts on the U.S. side?
Yeah, so when we talked before about Prince Rupert is primarily a port that is for U.S. imports. So the imports come in through Canada. They make a long haul, oftentimes to either Chicago or Memphis, and go onward from there. So there really are some, just sort of downstream, impacts that could impact shippers that are trying to get products to U.S. Consumption centers, and we've seen that in Sonar as well. So the cross-border shipments, it's an issue for those things. It's also just a real big issue for Canadian shippers that are moving things in and out of really across the country, but I think right now particularly in some of these older eastern cities like Montreal, Quebec, Toronto.
Excellent, Mike. Thank you so much. Insightful as always. Thank you so much for tuning in. That's going to do for this Tuesday edition of FreightWaves Now. We're always streaming around the clock on all your favorite streaming platforms, including Apple TV. Check out our FreightWaves TV app. And if you're looking for more insights, check out our Passport program, where you get a lot more deep insights and access to all of our world-class events. Thank you so much for tuning in, and we'll see you on the next episode.
Is the trade war back on?
Trade war.
Full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.